This is Rick Rule for Rule Investment Media and the Rule Classroom. Co-sponsors of the 2025 Natural Resources Investment Symposium, held July 7th through 11 in Boca Raton, Florida, or via live stream from the comfort and convenience of your own home. A couple things you need to know. The first is that this conference will feature over 50 hours of intensive programming in 4 days, more than you can possibly absorb. To that end, we're interviewing every exhibitor and every speaker before the conference so that you can allocate your time and, more importantly, your capital more efficiently on the 4 days from July 7 to 11 inclusively. Whether you attend live or live stream, it's important that you get to know the companies ahead of time and that at the conference, either live or live stream, you reach out to those companies who are interesting to you so that you can explore them deeply. Know, too, that every single public company exhibitor at the conference has been vetted to the extent that every one of them is owned in accounts owned or managed by myself. My ownership is no guarantee, sadly, that the stock goes up, but it is a guarantee that unlike any other conference on the planet, every single exhibitor has been vetted. Note that we turn down more exhibitors than we accept. To the extent that this interview interests you, and I think it should, it's important that you study the company and you reach out to the company, ideally before the conference, but certainly at the conference. To that end, ladies and gentlemen, today's interview is with a friend of very long standing, Rudi Fronk. I think Rudi and I have known each other for 3 decades, for a very long time. Rudi, first of all, thank you for 3 decades of toil on behalf of investors. Thank you, too, for your relatively low G&A relative to ounces controlled. As an investor, I appreciate that. But thank you in particular this year for your ongoing sponsorship and support of the Natural Resources Investment Symposium.
Rick, great to be side by side with you here, and I am really looking forward to your conference. It's one of the highlights of our year.
So tell me something about Rudi Fronk. Why should our listeners care what you have to say about this deposit and about the gold price? Tell me something about what you did to get yourself here.
Well, 40 years plus in the business. I'm a mining engineer by background from Columbia University and also degrees in economics and finance. I built mines in my career in third world countries. I've had mines I built expropriated, learning how real political risk is. I would classify myself as a gold bug. I formed Seabridge in 1999 with my colleagues with a view that the price of gold would go substantially higher when gold was trading at about $260 an ounce. And so far, so good.
I think your colleagues are important to talk about, too. Not particularly well known, but I would suggest absolutely determined gold bugs. Tell us something about the people behind Seabridge, in addition to Rudi Fronk.
Yeah, so when we formed the company, we went out and acquired uneconomic gold deposits from the majors for pennies on the dollar. We initially established our shares as an out-of-the-money, unexpiring call option on gold. And that attribute attracted a lot of people that thought the gold price would go higher. One such individual is Albert Friedberg, who's been a shareholder of ours now for probably 25 years. I think last count, he owns about 18% of the company. He believed in higher gold prices back then and still believes in higher gold prices from this point forward.
It's important to note, and you don't really need to comment on this, but you're not Johnny come lately to gold. There's a whole bunch of people who raise money for gold companies when the price breaks out. You've been there for a very, very, very long time. So tell us something about the assets that you've acquired. Describe them, and describe them in the context of the global inventory of undeveloped gold deposits.
Yeah, so we sit with 100% of the KSM project located in British Columbia's Golden Triangle. When we bought this from Placer Dome in the year 2000, it was small and challenging from a logistical perspective. That's changed dramatically. Today, KSM is the largest undeveloped gold project in the world if you just look at the gold. If you look at the copper and ignore the gold, it's the third largest undeveloped copper project in the world, and one of the few projects of this scale that's not already owned or in the portfolio of a major mining company. If you look at the economics of this project, we've done a number of studies on this project over the years. The most recent pre-feasibility study was done in 2022 that showed a project that had an initial mine life of 33 years, producing over 1 million ounces of gold per year for those 33 years and a lot of copper, with an all-in cost of production of about $600 an ounce, including the upfront capital of $6.4 billion, sustaining capital, closure costs, and operating costs, net of copper credits. And what that has allowed here, Rick, it's the transformation of initially an out of the money, unexpiring call option on gold to an in the money call option on gold today that's just getting better in terms of the ounces we control. If you look at the in the money value now at $600 an ounce all in costs, and at today's gold price, reserves at this project will generate profitability in excess of $2,000 an ounce.
So we established the fact that the property, at least with regards to a pre-feasibility study, was economic at the prices that existed then, 2010, 2011. Obviously, I think it stands to reason that if your AISC generates free cash in excess of $2,000 an ounce, that the deposit is perhaps wildly economic at $3,000. A couple questions I have to ask you. The first is, there's obviously been capital cost escalation. Do you have any sense of what it might cost to build that mine today? And what does that capital buy you? What's the reserve and resource base, both by way of gold and by way of copper? In other words, what's the size of the prize?
Okay, so the resource base is gigantic. We have 12 billion tons of economic resources contained in 5 deposits that give us 160 million ounces of gold and 58 billion pounds of copper. The pre-feasibility study we did in 2022 only captured about 2.3 billion tons of the 12 billion tons of resources, because we limit our mine plans based on what we have permitted in terms of tailings capacity. And that initial 33 years of mine life with the 2.3 billion tons captures 47.3 million ounces of gold as proven and probable gold reserves and over 7 billion pounds of copper.
Which is to say, sadly, Rudi, in the remains of your lifetime and my lifetime, we barely scratched the surface of this deposit. I have lots of places I could go with the question. But one thing that I want to point out, well, two things I want to point out. First of all, is that you've worked for 30 years to develop good relationships with the indigenous communities in northwestern British Columbia, in particular the Tahltans, who I personally regard as the best partners that a mining company could have. Tell us something about the community relations that you've established with your hosts and why that's important up there.
Well, the bottom line is, if you don't have the support, the endorsement of the local indigenous groups you're operating within their communities, you're not going to get your project approved. And we recognized that very early on, going into the different communities back in 2008, introducing who we were, what our plans were, and promising that we would keep them engaged throughout the entire process, which they have. And if you look at the Tahltan, the Niska today, where we have fully committed impact benefit agreements in place, they continue to support the project year in and year out. In fact, over the last few years, we've started what's known as substantially started activities to ensure that our permits are now good for the life of the project. And in that process, the Niska Nation, the Tahltan Nation, and the Gitxsan Nation stood up in strong support of that substantially started designation.
And tell us something about what substantially started means. You haven't just sat there and let the ounces sit in the ground. In fact, you've substantially de-risked the project for whoever the ultimate buyer might be by making a substantial capital contribution to the infrastructure and the pre-mine works. Talk to us about how much you spent and what it is that you've accomplished with that money.
We kicked off substantially started activities in 2021, raising $375 million initially US with Sprott and Ontario teachers. And then we spent those dollars on building roads, building camps, building fish compensation areas, building bridges, and tying into the BC Hydro facility there, which gives us cheap hydropower for the project. So we spent about over $500 million already of the initial capital estimate of $6.4 billion to do that work. And why we did that, we've made it very clear that KSM is beyond our capabilities. It needs the involvement of a major mining company at some point in time to advance this project to a construction decision. And the permits were set to expire in 2026. In BC, you can delay or postpone or eliminate the permits expiring by getting that designation. So by us now having substantially started designation, it means our permits are now good for the life of the project. In the case of KSM, that could be 100 years.
160 million ounce gold deposit is, as you suggest, unique. You also suggest that the upfront capital cost, by the way, suggest correctly that the upfront capital cost is beyond the means of any but the very largest mining companies in the world. Can you talk to us, given your experience in mining, about the problem that the major mining companies face with regards to depletion? The fact is that every year a major mining company mines, their mines don't get bigger, they get smaller. These are businesses in liquidation. So, talk to us about how this fits into a corporate portfolio strategically and the problem that the major mining companies face with regards to resource depletion in the face of increased gold prices.
Yeah, I think our industry is their backs are against the wall right now. If you look at the gold majors, and I'll just pick on the gold majors now, if you look at how they've increased their share count over the past 15 years or so, yet they have not increased the reserves of their production. The reserves per share and the production per share have gone down precipitously. For them to maintain production levels and try to do it on a per share basis, they're going to need new projects. A KSM fits a lot of needs of both the copper companies and the gold companies going forward. You know, you look at KSM, yeah, 6.4 billion is a lot of capital. I get that. But even at our base case metal prices of 1740 gold and 353 copper, this project generated a net cash flow over the first 5 years of operation of $12.6 billion. Okay. 6.4 billion upfront, 12.6 billion the first 5 years, 2 times capital coverage. If you look at the net cash flow over the first 5 years at today's spot prices, it goes from 12.6 billion to 23.2 billion. Let's say capital goes to 10 billion, Rick. I don't think it will, but let's say it did. You're still looking at a very capital efficient project that's going to get the payback of initial capital at $10 billion at about 3 years of the initial 33-year mine life. This is exactly the type of projects the big companies need and will own.
Rudy, one of the things that impressed you, you won't remember this, but one of the things that impressed me the first time I interviewed you about Seabridge was your focus on gold, silver, and copper resources per share. You've been quite stingy with regards to issuing shares. And I think that that's the essence of optionality. Do you have current numbers in terms of reserves and resources per share?
Yeah, they're staggering. So if you look at it in terms of ounces of gold per common share, it's about 2 ounces of gold in the ground per common share. If you look at copper resources, it's over 600 pounds of copper in the ground per common share. If you look at silver, it's over 10 ounces of silver per common share. And if you look at pounds of molybdenum, it's over 10 pounds of molybdenum per common share. If you actually add all this up, Rick, and I know you're not supposed to do this, but if you add all of the metal in the ground at today's metal prices, you're looking at over $8,000 worth of metal in the ground per common share outstanding. And today we're trading at about $12 a share.
I think that is something that one should talk about. There are different reasons to buy different companies. Leverage to commodity prices and optionality is a perfectly valid way to do it. It isn't the only way to do it, but to the extent that somebody believes in sharply higher commodity prices, understanding the gross recoverable commodity per share, I think is a very, very, very important metric. Not the only one, but it's certainly theirs. Rudi, a couple things. Tell us where this company trades, what the market capitalization is, what the symbols are, that kind of thing.
We trade primarily in the New York Stock Exchange, a full NYSE listing. We have about 100 million shares outstanding today. Insiders own over 30% of the stock, so it's very tightly held by I know you call them adults in the room, Rick. Copernic just increased their percentage in the company dramatically. They're now above 10% ownership in the company. Albert Friedberg owns over 18% of the company. And then insiders like myself, co-founders, directors, and employees own another 5 or 6% of the company as well. So it's a fairly tightly held stock. At $12 a share and 100 million shares outstanding, our market cap is about 1.2 billion US. Our NAV, I don't like using NAV because NAVs on projects that go on for multiple generations may not be the best measure of value. But if you look at we're trading at less than 5% of our NAV at today's metal prices, which is quite low by industry standards.
Our mutual friend, Robert Friedland, points out that NAVs for very long live deposits are interesting because the net present value of free cash flow over 10 years is nil. But after the 10 years is over, you restart the NAV clock at the same price that you at the same place that you started from, which is to say that the NAV is refreshing itself in your case for 5 or 6 decades. To the extent that we will have people attending the conference either live or live stream for whom optionality is an interest, people who believe in higher gold and copper prices, how do these people learn more about Seabridge? Who in particular do they contact, and how exactly do they contact that person?
Well, I not only am I the chairman and the CEO, but I'm also head of investor relations. So people are always welcome to contact me directly. My email address is Rudi, R-U-D-I, at seabridgegold.com. And if you do send me an email, please send me a phone number. I'd much rather call you back and chat with you versus responding by email. So I'm the guy to go to.
Rudi, thank you for 3 decades of service to gold mining investors, me in particular. Thank you, too, for your ongoing sponsorship and support for the Natural Resources Investment Symposium. I look forward to hosting you in Boca Raton, Florida.
Thanks again, Rick, and I'll see you in July.